Welcome back to you, Sugar Plum. So a lot of you have been asking me about new innovative, or so we think, features that have come to crypto, new DeFi features. And there are two websites that went pretty popular based off Arbitrum. They are RDNT and Pendle. I'm going to explain to you why this is not as revolutionary as you think, and your path to riches is actually not here, and how everybody's getting trapped. Of course, big whales aren't getting trapped. The small people are. So as you can tell, this is the Ethereum chart. I have this. This is a weekly super trend. I want to show you something. Back in 2020, we had the zombie virus. We had a capitulations and then we recovered back. During this time, we had DeFi season. So we had Uniswap. We had Compound. We had Aave. We had literally decentralized finance be birthed in crypto, and it had a big season. It had a final blow off up here. This is where basically Chainlink went up and it hit $20. It's funny, which is higher than it is today. And many other coins hit their peak, synthetics, etc., etc. This is where all the founders actually started dumping their coins, started buying the famous property, and all of the painful things started happening. All of this in this DeFi season. But what's been happening here? We have this bear market, friends. We have this bear market in crypto. And in the midst of this bear market, people start becoming a bit of a smarty pants and they start innovating. So with RDNT, for example, RDNT is a protocol that has started to catch a bit of attention. And RDNT, okay, I'm going to show you firstly the coin price. So the coin price, look at this. The chart ain't doing too much. You know, it's going down. But what is RDNT and what does it do? It's literally just Aave with a bit of tweaks. Okay, so it's just an Aave clone. So when you see this is a deposit. It's like, hey, if you place your money here, if you place USDT here, you get 3%. If you place Ethereum here, you will get 4%. Of course, look at this. This is the APR. What they have to do is they have to make up the yield by giving you their token. So it makes you question, okay, what happens if the token keeps drifting down into oblivion? Can they make up for it? This is the most controversial part of crypto, because every single community, all the founders, all the leaders will tell you that they will make up for this price drop by network effects and growing community members in the future. Let me tell you something. You will save so much money, so much wealth, health, mindset. You will save so much of your soul if you just keep a skeptical mind and you say, you know what, I don't believe you. Because this is the sad truth. 99% of them do not fulfill the dream. It ends up being a pump and dump. It ends up being a grift for them to exit slowly over time. Okay, now, obviously, when it comes to RDNT, you see money coming in. You see people having their money locked in. There is a deposit side, and here it is. If you borrow, these are the rates. It's all this. It's honestly just the same junk, friends. It's the same junk over and over. It's literally just Aave. They do some tweaks. It is on the Arbitrum layer 2, borrowing and lending. It is what it is, okay? So how can you actually make money from this? Well, the truth is, this is all leverage. This is all leverage, okay, friends? We're going to have to give you X's everywhere. Your path to riches is not borrowing and doing all this. I promise you right now. This is how people end up getting in messes. I'm going to show you something right now. We can go back. I can tell you stories right now. You know, this is the Ethereum in the previous bear market, right? The last one, okay? 2017. Ethereum dropped 94%, 95%. I heard many stories, right? Especially from the bankless guys. No one expected Ethereum to ever drop below $100, but it did, and it just liquidated so many people. So when crypto finally stops, it's disgusting. It's a freaking scam. It's literally a Ponzi scam collapsing minus 95%. And many people will say, oh, but there are coins out there recover. Okay, yeah, but what? 7 of them? What about the other 40,000? They ain't recovering poop. The founders dump on everybody and they get to escape. So you got to be super careful about this. How do you become careful of this? Okay, you got to remember, if you are in spot, you are safe. If you are in spot, you are safe. Leverage is how everybody gets wiped out. Okay, so this is what happens. Now, when you're looking at a protocol like RDNT, you can borrow and get short. You can do a synthetic short, right? It is a short. So you can like borrow Ethereum, and then when you borrow their Ethereum, you can sell it on Uniswap or wherever you want, and then now you have the money, but now you're effectively short. Okay, and this is super dangerous. Don't short crypto. 99% don't know what they're doing. I know there are heroes that appear on Twitter. They act like they're some sort of geniuses. Karma's gonna get them. These people are very happy when other people get destroyed and ruined. I'll tell you right now, man, the world, you know how the world works, friends. Karma works, and it's gonna get these people. Just not only are they hurting you, the innocent people, they're hurting their souls as well. So just be careful when it comes to this, because crypto is super thin and super volatile, and never underestimate the power of FOMO when people want to get in. So you have these coins here on RDNT, and the answer, look, whenever the market's going up, people want to leverage, okay? Always, always, always. When this is a weekly chart, weekly Ethereum, when we flip green, that's it. It is on, and we keep going and going and going. That's exactly what we want. You know, coincidentally, most recently, we did flip a recent green just at the beginning of the year. Ethereum's flipped in April only because it did not get destroyed as much as Bitcoin. You know, if we go back to Bitcoin, you can see Bitcoin flipped green in January of this year. So Bitcoin was weaker than Ethereum, and it was able to flip it around and turn it around faster. But really, at the end of the day, you're just looking at Bitcoin and Ethereum. You can get a feeling, right? You know when everything's going up. That's the most important part. And now I want to talk about another coin that everybody's been speaking about, Pendle, right? Pendle. I was looking at it. Look, friends, I already know. Every single time I come across these, my hope goes up, and then I read about it and I learn, I'm like, oh, everybody's going to get destroyed again. Every single time, okay? Simple is best, all right? I challenge you, when you're done from here, firstly, thank you for liking, subscribing, press the bell button and all. Thank you very much. Bell button. Thank you very much, friends. I challenge you, go watch a video on how Pendle works. You will either fall asleep or your brain will explode within the first 90 seconds. You're like, what? What are they doing? You're moving this with just you'll see what I mean, okay? Now, all they do is, okay, this is, I'm going to bring you back to something, okay? On my Twitteroonies last year, I said, potential crypto narrative. This was potential crypto narrative, okay? When Ethereum has staking, which it does now, okay? When Ethereum has staking, like it does now, people will do more lossless investments, okay? What does that mean? So lossless investments, or you can write it as no loss investment vehicles. That's better to write it down, okay? So what does that mean? It's because, well, when we write no loss, all right, you think, wow, you can't lose. No, you lose your yield. That's basically what you're doing. So you'll get your Ethereum right here. You'll get your Ethereum, and then you'll put it in a protocol, okay? You put it in a protocol, and in this protocol, they will give you, okay, they'll split it up. They'll say, okay, you have now two parts. You have your Ethereum that you put in, and also you are going to have your little yield that's growing. You know, we can do a little plant that's growing. Yay, you have your little yield growing. This is what it is this is the addition. This is what's happening when you this is what's happening when you stake your Ethereum, right? So when you stake your Ethereum, at the end of every month, you receive yield. So effectively what they're doing is they're letting you play with the instrument, except if it doesn't work out, the most you can ever lose is your yield part. All right. So in a nutshell, if Ethereum was giving you 5% per year and you invested 100,000, okay, that means in 12 months, all you can ever lose is the 5,000 yield. Okay. You still have 100,000 of ETH, whatever the ETH amount is. Okay. So it doesn't even matter about the USD value. It's the ETH. So this is where people can start to get really gambly and degenny. But it's more of a controlled form of degeneracy, because you can't really play with too much unless you start cranking up the leverage. Here comes Pendle. Okay, so people, you know what I mean? Like you can start locking it up and doing this. But this is where the premise comes from. So I was already talking about this last year. I know they do this in traditional finance. There was actually a narrative that happened in the 1990s with interest rates. They did the same thing. Yeah, so basically, this is what investors really crave. They're like, well, I have an asset I never want to lose. And they go, okay, yeah, no, for example, like you might have, let's say there's people here with 100 ETH. 100 ETH, they put it somewhere. they will never ever lose their 100 ETH. But what the protocol will do, this is how the financial instruments start to do. They will play with the yield part. So let's say if you never were in the protocol itself, you would earn 5 ETH yield, right, in 1 year. That's what happened. But in these protocols, what they are effectively doing, they're mixing and matching and they're morphing it around. They are able to play with that 5 Ethereum in any different way you can think about. I mean, it's making money. Whatever you can do with money, you can do with it. So one example I thought of, this was just last year, I thought, wouldn't it be cool if you had a protection instrument? And what I mean by that, well, it would be an instrument where with the yield every single month, it would go and buy a long-dated put option. So this is my example, right? This is in Pendle. I'm talking about this is me. This is what I thought, okay? So what they will do is, so this is just sommi example, right? Sommi example. Obviously, I'm not going to make a coin or do anything like this because you can't even do it, friends, because the option market makers, the spreads are too wide, the spreads are so wide and it's too expensive to do any of this, all right? We're not there yet, but this is just something in the future. So every year, you can take the yield earned and buy a long put. You can buy a put. This is downside insurance in case of Ethereum collapse. So this would be fantastic. So effectively what you're doing is you never earn your number go up. You never do. But if there is a black swan, if there is a black duck collapse, if there is a zombie virus, if something happens, if crypto has a bear market that you didn't see, your yield every single month that you're accumulating. So let's say, at the end of July, you were supposed to earn 0.3 Ethereum. It would take that and it would buy insurance against Ethereum dropping. And it would be like super aggressive. It would be like, buy me insurance such that I make money if Ethereum drops 50% or more. Okay, because you obviously want to protect against huge collapses for the next 12 months. And you would just keep rolling this over. That's all you would be doing every single time. So there's obviously an opportunity cost here because the yield made here, you could be watching the number go up, this little plant growing. But what this also helps you do is it helps you sleep at night. So this is something you just literally put in a protocol. It's like, hey, I want to leave this yield here and just protect me so that I can sleep at night easy. And it could do this. So, every single month, the protocol would take your little yield and it would go to an option and own the option. It would buy a put for you every single time and just maybe, and send it to your wallet. Now we don't have the protocols out there developed to do this, but I'm trying to open your mind into what's possible in the future. Okay, so this is something which I think would be cool, but over time, it would be interesting to see if it's actually viable because if too much volume comes in, the market makers will be charging you an arm and a leg, but it's interesting to think about. This is the stuff you can do. Of course, there is no real, I know we call it no loss, but theoretically it is a loss. You're giving up the inflation reward. You're losing a bit of the inflation, okay? Now, you could do this yourself today. It's just that people, they don't want to pay insurance without making anything, right? Because they're too scared of it dropping every year. For example, losing their quantity. So people want their quantity to go up or never go down. That 100 Ethereum, they want to make sure there's always 100 Ethereum. They don't want it to be 99 in 1 year and then 98 in the year after. They do not want that. So Pendle does allow you to do something similar when it comes to LSD. So liquid staking derivatives. Okay, you have your Ethereum and then this is your ETH and it will give you your yield, the yield token of Ethereum plus that. And it splits up the two tokens and lets you play around. Okay, so people are talking about this a lot. And I want to let you know, it's all a lot of poop. Okay, big, fat poop. All right, I'm just going to tell you something. Okay, so I'm going to tell you something that I wish I knew a long time ago. Okay, let me tell you something. When I see something like this get popular, instead of looking at the white paper and how the protocol works and how's they ever going to make money, instead of looking at that, I automatically reverse engineer and think, okay, who's going to get trapped in this? Okay. It is a very skeptical view, but this is why you listen to me. Thank you very much, friends. Like, subscribe, bell button, all. Thank you for sharing with your friends and family. I'm here to tell you, once you start to reverse engineer and go backwards, you're like, okay, I can figure out the scam straight away. Now, it's not a scam, but I'm just telling you, this is how everybody will get scammed. So you got to think, okay, who is going to be buying this? It's Ethereum lovers. Okay, of course, it's always Ethereum lovers. Okay, this is what it is. Okay, now I already have told you many times. What do Ethereum lovers tell you is 100% programmed? They will tell you that $10,000 Ethereum is 100% programmed. It is undoubtedly coming. Have you noticed? Bitcoin maxis will also say $100,000 Bitcoin is also programmed. Okay, that's exactly what they say. So already you can see this. Now, if they're talking like this, effectively, okay, you can see it now. I hope you can see. I'm going to share it here with you. What they're effectively saying is participating in something like Pendle, where you get the yield on your Ethereum and get to play with this, and you have these cute little lockups that go for 400 days or 300 days or 900 days. Effectively, they're so confident that Ethereum hits that nice round number 10K or even 20K for everyone to get out, clap their hands, the unicorns and the fairy dusks, bless everybody, and we all win, okay? But let me tell you something. If you know about the previous bull market, you'll know something. There was a giant, big, disgusting scam trap that formed. Look how close, I want to tell you something, okay? Look how close $100,000 was. Just want to show you. See this line? See that green line? That's how close $100,000 was. It was so close on the chart. But what happened? No one, okay, obviously, not by no one, I mean like 95% of people did not sell at 50 to 60K. They did not sell in this box. What was the next step? We went down to 15K. That was the next step, all right? So I know on a chart, it looks like, oh, we didn't get to 100K, but we got near there to 50K. No. No one gets out. You already know this. Nobody gets out. There's not even enough liquidity to support everybody getting out. 95% of people do not get out. Only like 2 to 5% of people actually get out above here, okay, to actually get out. And then the next stop for everybody is literally to go down to 15K. Think about this difference, okay? Think about the disappointment from 100K down to 15K. We know it. We felt it together. So I'm just telling you right now, everybody in these liquid staking derivatives trash is going to get into the exact same trap. They all believe $10,000 is programmed. They all think it's 100% certain. It's 100% coming. Nothing's going to go wrong. We're burning. We got EIP, blah, blah, blah. Ethereum, Vitalik is an alien with a giant brain. Yes, of course he is. Of course. He's very smart. But I'll tell you one thing. When buyers run out, that's it. What if we get scammed? What if Bitcoin actually scams us at $80,000? You got to prepare for this. So when you know all this, you have to have an appreciation for the real path to winning. The real path to winning is not playing these little degen leverage games where you put it into a protocol and then you earn yield and you pray that there's no bugs in here and you pray that they don't dump the token and all these other weird stuff. No one kills it like this. You know who kills it? The people who get in early. Okay, so this is Pendle. Yeah, this is Pendle. Surprise, surprise. Here was the Binance listing. Made the top. See you later. Okay, so the time to get in Pendle was last year. All right, if you believed in it. People are now coming in thinking that this is, I can already see the trap forming. So people are coming in. They see altcoins down. They see that Ethereum has been strong. So they're incorrectly going to assume that Ethereum goes up only and altcoins struggle. Okay, let me tell you something. Have you ever heard of buy low, sell high? Well, let me tell you something right now. You ain't buying Ethereum that low. When you ain't buying Ethereum when it's down 60% towards 50% off the top. You're not buying it that low. There are altcoins down 95% off its top. Okay, that would be the equivalent of buying Ethereum at $222. Would you rather buy Ethereum at $2,000 or $200? There you go. Obviously, the $200 is way lower. Now, of course, the feelings, you feel more disgusted buying at $200 because you don't even believe. But that's the game. That's the game. So now we can already tell you, right? People are going to get themselves trapped already. I can see it. So they have a need to do this. And this is my final message for you, right? You have to understand the need to do this. These liquid staking derivatives, so liquid staking, all right, more like Diarrhea, right? This is exactly what it is. The people who want to do this, they do not understand the trap that's coming before them. They genuinely believe that because altcoins are down hard and Ethereum has been good, they think that means buy Ethereum, exit altcoins. Okay, that's what they think. They're going to be in for a rude awakening. Why? So you're probably going to wonder, how do they actually get trapped? Well, I'll tell you how they get trapped. Just like how Bitcoin stopped at 60K and then dropped back to 15. Who's to say? What if they're all holding out for Ethereum at 10K? It stops at 8, next stop 3, right? And now you've wasted another 3 to 4 years. What if this happens? You got to plan for this. So how do you actually plan for it? Well, you deploy your Ethereum, okay? You spend your Ethereum. To avoid this, okay, you buy undervalued network effects with strong communities. You deploy your ETH because all the alt ETH ratios are collapsed. Most of them are collapsed right now. That's exactly what you do. Okay, a lot of these people are completely disregarding it, and that's fine. That's what makes the market. These people, you need people to not believe in this, because when things do turn around, they start becoming believers. Okay, so this is going to keep coming in front of your face. All right, and obviously that's what she said. So you're gonna see more of these little derivative products coming in. Stake your ETH, come out, no loss, etc. These are all distractions. This is for somebody with 8,000 Ethereum to their wallet. They don't really care. They've got 18 million. They're like earning the yield. They don't even want to participate in these smaller games. But if you have a clip size of anything less than 100K, if you have a clip size less than 400,000, 500,000, you are literally wasting your time. Because remember, these people, they think that by buying around the Ethereum 2K, they think their 10K to 20K is programmed. They think it's programmed for them to come out and get out here, okay? Don't forget what I told you about that Bitcoin chart. Remember, friends, you got to learn this lesson, okay? Because it happens so fast. We all thought 100K was coming. We stopped at 50 to 60. Next stop, 15. Okay? Who's to say in the next cycle? Because none of this is guaranteed. We're lucky this even works. Who's to say that Ethereum can't stop at 8,000, drop back down to 2, okay, by 2025, 2026, and just freaking annoy us again? All right, who's to say that? You have no one to blame but yourself, because you didn't take advantage of the very low, cheap altcoins that are down more than 90% off the top. Remember the goal, man. The goal is to buy low, sell high. And also, don't forget the other goal. Confirm our friendship in the comment section. Like, subscribe, press the bell button, and I'm going to catch you in the next one.